today we're going to talk about understanding candlesticks. Right? So, as a beginner, the first thing that you would need to understand or be aware of or know how to read before you even decide to enter trades or understand trading is understanding the candlesticks. Right? So, the candlesticks are these green and red bars that you're seeing on the screen right now. Right? These things are called candlesticks. Right? Candlesticks are visual representations of the price. Right? So if you look to the right here, this dotted line that we see in here, by the way, I'm using TradingView. Right? TradingView is one of the best platforms that we could use to analyze trades before we actually execute them. Right? There are a list of tools that we could use to go through to understand what you would be seeing here. And I'll have another video linked to explain how to use this software. Right? Now, the first thing is understanding these candlesticks. Now, as you can see, each one of them look a little bit different. Right? So, based on how they look, they will tell you something. So, let me think about candlesticks as letters in the alphabet. So, each one represents a letter. Right? And together, when you put them together, they would form words and sentences. Right? So, but we're getting ahead of ourselves. So, the visual representation of the price. The price is this dotted line that you see in here and in here, right? This here is attached to this green line and it's always moving. Nobody could do anything about it, right? You or I can't manipulate this price. This price or this dotted line here is the actual price of gold right now. So we are on the gold versus US dollar chart, right? So I like to trade gold. This is one of the pairs I most like. And this is the real price of it. So it's 2,500 US dollars per troy ounce of gold currently, right? And the market keep fluctuating. Right? Wonderful. So each one of these candles means something, but what they mean, right? So without going too in depth, because you would have to do more research on your own if it is you're really interested in this and you want to, actually start trading and whatnot, right? But I will give you a basic rundown of it. So these big red candles, they could either be big and red like this, or they could also be big and green like this, right? It doesn't matter. They represent the same thing. I will tell you what they represent, right? So going back to this red candle here, the bigger the candle is and the more full the color is like this, is the more volume in the market. Now, red candles mean sellers or selling in the market, mean the price is going down, and green means the price is going up and there are buyers in the market. So sellers represent a bearish market, if you hear anybody say it, and buyers represent a bullish market. Right? So I'll give you a little idea. So sellers means the market is going down, right? And buyers means that the market is going up. Right? So bearish is down and bullish is up. Right? Good. So now that we have that and we understand that, then we can identify what the green and the red candles mean. Right? So once again, green candles mean the market buying, bullish or going up, and red candles are bearish, selling, going down. Right? Cool. So the more volume each one of these candles have, or the bigger they are, means that more people are selling and the market is going down. Right? If it is green and it's big like this, meaning going up. Right? Cool. So that's how you understanding what each candle means. These little wicks, right? We call them wicks. These little stuff here, right? At the ending of the candles, these little guys here, right? Pass circle on it for you to see. These little wicks here, these little guys here, we call them wicks, right? What they represent is where the price was. Yeah. For example, the dotted line as we established is the price. So once the price continues to move up, it will be attached to this price. And if the price was to go down, this will be the highest point. So what these wicks represent is the highest and lowest point that the market was. So this dotted line would have been up here on this candle at a previous point in time, and then it would have been down here on this candle at a different point in time. Right? So once the candle pushes down and it leaves that area and it goes back up, it will leave a wick on the end of it. Hope this makes sense, right? So if the market was to push up to the top here and then come back down, it will leave a wick, right? So it happens on every candle that you see a wick. So the market would have pushed up here and then it would have pushed back down and leave a wick, right? So that's how you can identify the wicks. It's called rejection. It's where the price was and then it isn't anymore. So it went here, the dotted line went all the way down here, and then before the candle closed, it went back up here, right? You can see how long a candle have before it closed on the right hand side here with this time frame, right? So at this time frame, all you go to do is the settings and you select countdown to bar close, right? That will give you how much more time each candle have before the open and close, right? Each candle on a particular time frame represents the amount of time this candle running for. So right now, if you look to the top left hand side here, you would see that we on a 4-hour time frame, meaning each one of these candles takes 4 hours to open and close. The candle always opens on the bottom left and closes on the top right. That is for buying candles, and it opens on the top left and closes on the bottom right for selling candles. Right? So here would be the open of a candle. So here would be the open of a candle, and then here would be the close of that same candle. Right? That's it for selling. And for buying, the candle would open here, bottom left, and then it will close on top here, bottom right, top right. Right? So this is how we identify where the market opened and where it closed. So that means 4 hours ago, the market would have opened here, and then it would have closed 4 hours after here, right? If we change the time frame on the top left now, and we could see look at it, right? So 4 hours, we could change it to 15 minutes, meaning each one of these candles would then take 15 minutes to open and close, right? As you can see on the right hand side here, we have 11 more minutes for this candle to close. Same thing, we could come down to a 5-minute chart, and each candle will take 5 minutes. We have 1 more minute remaining in this candle. As you can see, it moves a bit faster, and then we could even come down to the 1-minute chart. This candle just formed, right? So we have 48 seconds remaining in this candle, and that's basically understanding what the candles are. What you would need to do is to do a bit more research to understand in depthly before you even attempt to take trades how these candles are actually formed and stuff. But so it's a basic idea of what it is you're seeing when you look at each when you look at a chart for the first time and you're blinded by, you don't know what you're watching, right? So to recap, just to get a basic understanding again of what's happening. When you land on the chart, these first things that you're seeing here are called candlesticks. Green candles mean that the market is going up. Red candles mean that the market is going down. On the time frame, each one of these candles will take a particular time to end. You would have to know which time frame you're looking at. So it's either the 4-hour time frame, each one of the candles will take 4 hours to end, 50 minutes, 5 minutes, or whatever your trading strategy would allow it. Right? We will get deeper into trading strategies. But this is basically understanding candlesticks. Right? You would need to do more research to understand what they mean fully, but this is just the accurately price representation visually is what it is, right? So it's not too complicated, it's not too hard, there aren't that much different patterns, well, candlestick types to understand, right? Wicks mean rejection, where the market was. The bigger the candle, the more people was going in that direction, either buying or selling. It's simple as that. Right? So I hope this video helps in some way, and you can always give feedback and let me know in the comments what other videos you want to see, so I can help you understand more about trading and whatnot. Right? So I'll let them know later.